Hello from the Dukascopy TV studio in Geneva. We're talking about the costs of the climate change and climate finance with Eric Usher. He is from the United Nations Environmental Program here in Geneva. Welcome to the studio.
Thank you.
So let's talk about the costs of climate change and the financial losses that are projected from climate change. So what's the current status on it?
Yeah, I mean, what's clear is there are the costs and the risks. And one of the issues of climate are, should we focus on the mean costs, which we should, but we also need to be very aware of what are the tail risks, what are the potential much larger risks. One of the ways that we open people's eyes often is this issue of if you're about to get on a plane for a flight, would you do so if you were told that there was a 5% risk that the plane will crash? Now, obviously you would not. And our approach to climate often societies, governments, even the private sector seems to be sailing along to saying, what's the mean? But we have to pay a lot of attention to what are the tail risks, the extreme risks that might be involved. And so if there was a recent analysis done by the Economist Intelligence Unit, which looked at the value at risk to the global economic system of climate change, both the means and the extremes. And their assessment came out, which was we have about, to period to 2100, to the end of the century, we have a value at risk of about $4 trillion for the private sector in terms of the cost they might see due to increased temperatures, drought, in other areas increased precipitation levels. So the economic system will have impacts. Now if you take that $4 trillion and you say, well, but what is the risk if instead of we get to a mean temperature increase, which might be 2, 3, 4 degrees, we actually go quite a bit higher, let's say to 6 degrees, which is kind of seen to be, you know, a potential outlier. Then that $4 trillion cost increases to 13 trillion. Now that 13 trillion, it's about 10% of the global assets today. And so we have 10% of our global economy at risk. That's for the private sector. And one of the challenges with climate is what we call the tragedy of the horizons. The problem is climate change is a long-term issue. It will require long-term changes, and it will have the effects roll out over a long period. So once the effects start to occur, you can't reverse them quickly. Which means that one of the challenges in the private sector with high discount rates is it's quite hard to look 20 years and 30 years down the road and to value it significantly, losses at that far out. But societies can. And so if we take that $13 trillion value at risk to the private sector and we say, well, what does that mean to the public sector or to society, which and use a discount rate around 4%, so a societal type viewpoint going 40, 30, 40, 50 years, that 13 trillion balloons to 43 trillion. So $43 trillion of value at risk within a global system. Today, that's worth about 140 trillion, or all global stock markets put together is about 75 trillion. So more than half the global value of stock markets today could be at risk from climate change.
So what is then climate finance about? What is its role right now?
The concept between climate finance, so the climate costs or value at risk are the potential damages to our economies. Clearly, we need to retool. We need to decarbonize our industrial model. We need to shift to lower carbon energy, lower carbon transport fuels, new modes of agriculture. There are many things that we need to do. One of the issues about all of these solutions, most of them are actually very capital intensive. So for example, wind farms. If you build a wind farm, you have to put a significant capital up front to building the wind farm. Once it's built, the fuel is free, it's wind. If you compare that with a coal plant, you put some capital up front to build the plant, and then you pay for fuel costs over 30, 40 years. Those fuel costs are not having to be financed, they pay as you go. Whereas with the wind farm, everything needs to be financed up front. So the finance sector plays a critical role in this transition. And if we're going to start to make these changes, governments are going to have to come in place with new frameworks, new regulations, policies, and laws to incentivize these changes to be made. Most of the innovations, most of the capital is going to come from the private sector, but the public sector has a primordial role to set the environment. Often it will be through new regulations. They'll start to put a price on carbon. They've already done that. That's been run through the Kyoto Protocol, going back to 1995, the European Trading Scheme, all which were approaches to put a price on carbon. That's one way to do it. With some successes, there have been some challenges as well, some kinks in making that work. Governments can have a range of carrots and sticks to get these changes to made. One of them is essentially to make some public transfers. There are very limited ability of public treasuries today, particularly in developed countries, to pay for these changes. But at some point, there is going to have to be some financial rechanneling from public and private, and rechanneling from brown to green. And to some extent, or to a large extent, it's going to have to be from north to south.
So where does these changes have to take place when taking into account this perspective of climate finance?
One of the natures of climate change, it's a global problem. So if Mongolia, this is an example, developing countries, if they build a new energy power plant, or if an American power plant is built, if one of those two is low carbon, it doesn't matter from a climate perspective because it saves emissions going to the atmosphere, which essentially mix. And developing countries have largely not built their infrastructure, or they're still doing so. And it's always cheaper to new build low carbon, like any infrastructure, than to retrofit it. So for the Mongolian power plant to do it in a way that reduces carbon emissions will generally be cheaper than to do it in the United States or in Europe or other established industrialized countries.
Eric Usher, you also brought two charts that are from the yearly, from a report that is nearly about the installation of an alternative energy worldwide. Could you comment on these?
Sure. I mean, one of the reasons why going into Paris there's a slightly more sense of optimism, as I said, in the last couple of years, there's been a lot of progress in various aspects of addressing climate. Renewable energies are probably the most visible one. And last year in 2014, globally there was about $270 billion invested in renewable energy technologies. That's roughly about the equivalent amount of what was spent on fossil fuel power generation. So you have one which is low carbon, the other is high carbon. And from a financial perspective, the investment loads today are similar. What does it tell you? Renewables are mainstream today. They're not a niche technology. And on this graphic, we see where are those investments happening. It's a global phenomenon. And from a manufacturer's point of view, if you're manufacturing wind turbines, you're selling into a global market. Now, some of the markets are unstable, like in any financial system, goes through cyclical periods. But from a global perspective, investment has been growing. One of the challenges, so in that $270 billion last year, it was a 17% increase on 2013 numbers, so it's a growth trend. In that period, the oil price, it dropped 50%. So one of the interesting observations is, are renewables investment and the economics of the renewables, are they tied very much to the price of oil? And I think the recent experience, there's a realization that, well, renewables broadly, particularly in the power sector, so solar and wind, which are the dominant technologies today, they're competing with coal. They're competing to some extent with natural gas, although natural gas is kind of a bridging fuel. You kind of need it even in renewables, at least in a transition sense. So for the coming couple decades. The renewables that do get affected by the oil price is biofuels, because those are transport fuels, and the transport system globally today still is heavily reliant on oil or fossil-based fuels. There has certainly been recent growth with electric vehicles, Tesla being the star actor today, but it's still starting from a much lower level. So the big message is that this is a global market. It's mainstreaming. And this is part of why there's a sense of optimism from a climate sense, because countries are realizing that this is a driver of economic growth. This slide breaks out the numbers shown on the earlier slide into developed and developing countries. And the interesting, when we went back 5, 6, 7 years, developed countries were definitely the leaders. And now what we're seeing is that the numbers are very close. In this year, we project that developing countries for the first time will actually be the largest destination for investment capital in renewables. And this changes the geopolitics of climate, because now we're saying, well, we need a lot of investment to happen in countries where it can be lower cost, and most of that's in the developing world. And what we're seeing is that commercial investment is actually starting to go there. Now, it's going there because it's an energy growth story. These countries are realizing that wind farms, solar plants are actually quite cost effective to their other potential technology options. If they're starting to do it, one of the benefits is that it's lower carbon. And so I think in terms of the final messaging is that countries are realizing that going forward into this low carbon world or low carbon pathways, maybe it's not as painful as we first thought. It's potentially a generator or economic regeneration can be done through the transition to low carbon. And in countries in regions like Europe, that's a real question, where are the jobs going to come from in the future? In the United States today, there's more jobs, and for Europe has been for some time. In the United States today, where the future of coal is a very hot political issue, the reality is there are more jobs in solar than there are in coal today. Once economies realize that and politicians realize that, making this shift from high carbon to low carbon starts to be much more viable.
Eric Usher, you are head of the United Nations Environmental Program Finance Initiative. Thank you very much for your expertise and being here today.
My pleasure.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.